Hi, this is Mr. Guy, and we're going to go over fiscal policy, and we're going to go over the third tool, which is tax credits or investment tax credits. And this is actually going to affect I in the GDP formula. Taxes affected C, and consumer spending, government spending affected G. This is the third tool, and it's tax incentives. So an example of a tax incentive would be if I'm going to give you a tax break for getting married, you'll pay less than somebody that's single. I give you a tax break for having children, so you have more of a tax break than somebody that doesn't have children. And for this, for I, it might be if you build plant and equipment, we'll give you a tax break and we'll take off 50% of the cost of the plant and equipment. If you build solar panels in homes, you'll get a tax break for doing that, or if you actually, whatever I want to do. The latest one the Obama administration did was they gave companies investment tax credits for hiring Iraq war veterans. So they had 25% unemployment, and there was a problem with Iraq war veterans getting jobs. So the Obama administration in the Congress basically said, we'll give each company $5,000 if they hire an Iraq war veteran, and it really worked really well. So we're going to do the same thing that we've been doing in government spending. So we're going to do this though with I, and we're going to do tax incentives. So the first thing is we have to have a goal. So here's our GDP formula. Here's 1,000 equals 700 plus 150 plus 200 plus minus 50. So it's the same formula we've been using. And we're going to say our goal is going to be 5%. We're going to increase GDP 5%. So we're going to do 1,000 times 0.05, and that gives us our $50. So our goal is up here, 1,050, and we're going to do tax credit. So what we've got to do is find the multiplier and get, what is it? So we've got our MPC will be 0.80. And then we use the multiplier formula, 1 over 1 minus MPC. And then we just fill in the numbers. And that equals 5. So we've got that. Now we just take our formula that we have for the multiplier, and we're going to look at 50 equals 5x. And we're trying to solve for x, and in this case it doesn't go into G, it goes into I. So x equals 10. So here is your I, it's going to go into there. Same idea happens, is 50 is our goal on the left-hand side, 10 is on the right-hand side. You have the multiplier. This is the multiplier formula, so the difference is 40. And if you want to calculate it out, it's 50 minus 10 equals 40. And that goes into consumer spending. So now we just add up everything. So we're going to go to 1,050 equals 740 plus 160, 200 plus minus 50. So in this case, we used an investment tax credit to increase the economy or GDP 5%. And then what we would need to figure out in this case is possibly what would be this actual tax credit. So what would it be? Would it be making solar panels? Would it be giving people a tax credit for recycling? Those kind of things. So if this doesn't make sense, please ask questions in class or post questions after the video. Thanks a lot. Have a good day.